All right, welcome back to another episode, and today we have Tom Humphreys. He's actually right here in my local area with Farmers Insurance. Tom, thanks so much for taking the time out of your day to join us and speak a little bit about the insurance industry. There's a lot of people that have a lot of questions about this right now, especially with the rising rates and all that stuff. So I just want to take a few minutes to kind of pick your brain and provide some information to anybody who's listening to this or watching this on YouTube, wherever it might land. I'm not really sure, but
Yes,
give us a little bit about your story, your background, and how you landed into with Farmers.
Okay. Yeah. So with Farmers, unique story. I spent 24 years in the Marines, and then was mentored my last 5 years, and by an insurance agent, and made the recommendation that I should probably get into insurance. And fast forward, a little over a year ago, I retired and from the Marines, moved back to home to Texas and opened up a farmers insurance agency.
Nice.
And we've been moving ever since, right? in the business.
Yeah.
So, I'm a small business owner. I'm my office is in Southlake, Texas, and I have 2 staff members. We're kind of a full service agency. So we offer everything from business owners, a business owners package that had, general liability, business life, insurance, EPLI, and then we have a special thing called Farmers Key. I'll come back to. Obviously, home and auto insurance for your personal, commercial auto for the business as well, and then we have our life insurance. We have term and permanent, and then an indexed life insurance policy, call it an IUL, so an index universal life, that we offer full service. So all of our agents, all of our clients can call us, email us, stop by the office. We take care of them. We help file claims. We help make payments if need be. We're not set up on auto pay, et cetera. So we going to do all the things, So,
Nice. Okay.
Yeah.
So now I think, of course, people have a multitude of options, whether it's USAA, State Farm, Farmers, of course, and Geico, all the big popular ones, just like Farmers. Right. I think, so obviously you're not too far away, so you can probably relate a little bit to this and maybe explain a little bit more. But I know when I the very few conversations that I do have with people about insurance rates, it's no secret that everybody's kind of upset about the rising insurance rates over the last maybe year or couple years. And there's a lot of rumor, there's a lot of speculation, but being that you are actually on the inside and you can actually provide some information, I guess. So what's that old saying? Like directly from the horse's mouth, I guess. That might be. Yeah. I know it's a long process and I know there's a lot that goes into it, but for somebody who's wondering, like, why are my rates keep going up and up and up? Can you provide a little bit of insight into that?
Yeah, sure. Great question. Obviously it's not a one size fits all explanation here, right? So I want to put that out here, right? There's a lot of variables with why rates will fluctuate. Okay. Some of it could be, your driving record, for example, if we talk auto, right? Driving record, credit history, the amount of claims you filed, or you protect your assets, or do you drive around with no cares? You know what I'm saying? Oh, hellstorm, we're going to just drive right into that real quick and go get another vehicle, right? Jacks up, right? So we're kind of all in a pool, right? Based on, income, our credit scores, our driving histories, you know what I'm saying? We're kind of, that helps keep the premiums down,
Sure.
So that kind of helps. When it comes to home insurance, it's tricky. Okay. State law states that you can have what we call 80% co-insurance, which I don't recommend personally. Okay. I'm going to say I personally don't recommend that, but you can get a low premium that way. Okay. But that puts 20% of the responsibility on the homeowner plus the deductible, right? So easy math, your home's worth $100,000. Okay. Well, if you're at 80% co-insurance with whoever you're with, it doesn't matter the carrier. And you have a catastrophic event, we're only going to cover you at 80%. Your house burns down, you may owe $90,000 on your house. We're going to give you $80,000 minus your deductible. You know what I'm saying? The
Sure.
difference is out of your own pocket. So that you can get a low deductible, right? Low premium, but you're going to put more risk on yourself, right? The premium goes up because you want protection of your house, right? 100%. Some people want 125% coverage to cover inflation, right? And this market's hot, so houses just jump up, 10, 15% on an annual basis in value. So what does that look like when a roof has to be replaced? What is the cost of labor, right? The cost of the materials. I know we talked before on our part one, right? We talked about the lumber and the eggs, when lumber was like $7 for a 2x4, you know what I mean? Well, then labor's $26 an hour for a roofer to get up on the, for example, premiums go up, you know what I mean? It's just the nature of it. I personally see it as a compliment. That means I have an investment. My property is increasing in value. I want to protect it, in the event of a really bad hailstorm, a tornado, whatever the case would be. Is, if you're in southern Texas with the hurricanes, you have flood insurance. You know what I mean?
Yeah.
When that tropical storm comes in and the beaches, come through, are you protected? You want that coverage because it's about the peace of mind. The last thing you want is your home to be destroyed and you don't have enough adequate protection, right? But anyway, what I would say is no matter who you decide to go with, whether it's with my agency or a different company, for example, pay attention to your declaration pages, with your coverages, pay attention to your exclusions. Okay. A lot of carriers will offer a really nice, enticing premium on your home, but there's a list of exclusions, right? So your coverage has it looks like Swiss cheese, right?
Yeah.
Okay. With farmers, we're an all perils protection. So our exclusions are like this, very small, very little, you know what I'm saying? So you may be paying a slightly higher premium with us, but you're covered.
Sure.
You know what I'm saying? So it's one of those get what you pay for mentality, right? An agency with us, I tell all my clients, pay attention to your age of your roof. If you have a new roof with me, great. 8 years from now, we might want to talk about your coverages because you're going to go from replacement cost to at cash value, or scheduled payment. And that's a whole different ballgame of what you're going to get on your roof if you have a claim. You know what I mean? Sure. So we need to have a consultation, and I try to do once a year with all my homeowners is let's sit down, let's talk about your house and make sure you have the right amount of coverage, I'll give you a quick example. The national standard, right, is 10% coverage on your separate structures. Okay. So you have your coverage A, so it's 100,000. Coverage B is your storage shed, your barn in the backyard. You know what I mean? Separate structure. Okay. Well, that's typically 10%. Okay. Well, a lot of homeowners don't have a barn that costs $40,000. And a storage shed that costs $50,000, right? So if your house is $500,000, you have $50,000 in coverage automatic. Well, I can shave a few dollars off of that by reducing your separate structures from 10 to 5%. So now you have $25,000 in coverage for separate structures, even though the barn you bought at Lowe's is only $12,000. You know what I'm saying? So I can shave a few dollars off, lower your premium, and still cover you. But a lot of agents, I can't speak for anybody, but at our agency, we'll thread that needle to help our clients as best as possible with all the coverages.
Nice.
Yeah. And then we have life insurance, I know we're short on time, so I'll just hit this up.
Yeah. Okay.
What frustrates me just as a person is people don't want to talk about life insurance.
Yeah.
Okay. The mortality, right? Okay. Well, we can't escape that like taxes, right?
Right.
Okay. So, and it's not about me. It's about if something happens to me, can my spouse continue to afford the house we live in?
Yeah.
Can my children still have their rooms that they've grown to love? Right? Is that there? Okay.
Yeah.
Because the worst thing in the world is seeing a GoFundMe account. Okay. Because it's not going to happen to me. No, dude, it is. Right.
Yeah. Eventually. Yeah.
Okay. So if you look at statistics with the mortality rate, okay, not a lot of people live to 90 years old. Okay. A lot of people get injured or die in car accidents or things other than natural causes. Okay.
Yeah.
All right. So let's just keep that in perspective. Right. But they'll have insurance on their cell phone. You know what I mean?
Yeah.
Right. Because that's important. Right. So, we have different types of policies. Farmers has a very large appetite of health issues that we can accept. Okay. And you can get a good low premium, a monthly rate, even for your kids, right? I don't want something to happen to me and then my kids have to move from a house to an apartment, for example, right? And my wife now can't afford the house. It goes into foreclosure or it sells, and they don't make anything off of it, but they have to downsize. And then every day they think of, daddy's not here. Okay. I had to change schools, right? I had to change my whole life direction changed for my entire family, right? Same thing for my wife. If something happens to her, I need to be protected, right? I need to be able to keep the quality of life going. So we have time to mourn, you know what I'm saying? And then be able to carry on with ourselves, right? So anyway, we offer term insurance, 10, 20, 30 years. Okay. We offer an index universal life, okay, which is a safe investment. It builds cash value. You still have your benefit, and if you have I have a 6-year-old son. If I can afford to then it's more expensive than a term. Well, it variables, but if I put X amount of money in, by the time they turn 65, okay, they have $900 to $1,000 plus of a cash value that they can pull that's tax free. You know what I'm saying?
Sure.
To help with their retirement, in later age and pay for bills and whatnot, pay for their grandkids to go to school, whatever. You know what I'm saying? Long-term investment. But if you can't afford it, that's fine. We have term insurance, and you can layer term. You can do a 20-year and a 30-year. You have 2 terms, right? It costs you $28 a month for the 2 of them. You know what I mean? So if your house, for example, is $500,000 today on your note, that's how much you owe, right? So let's get you a $500,000, 20-year, and then we'll get you a $250,000 30-year. So when your 20-year expires, your house is not, the mortgage is not $500,000 anymore, right? It's less than $250,000. Yeah. So now you still have 10 more years to cover the note of your house in the event something happens to you. Does that make sense? So your family
yeah.
where they're at, right? So but that's the important part of sitting down with me and my staff is that we will walk you through all that and have those hard conversations in confidence, right? So when you leave the office, you have peace of mind that, hey, this is a good decision. You know what I'm saying? Yeah. And we can have that hard conversation there, and
that makes sense.
But that's why I got into insurance. I want to help people. I hate seeing friends of mine I went to high school with having to do a GoFundMe account.
I hear you.
And you can get attached like an endorsement to your life policy. You can get a disability. If something happens to you, you know what I'm saying? There's a disability endorsement there to help fund,
sure.
Your care or whatnot. But anyway, that's a rabbit hole. Life insurance is a whole
definitely
of policies and procedures and all that. That's why it's important you consult with a professional, right? That's been certified, has been through all the training, that gets continuous education every year on it, to ensure that you're covered. You know what I mean? Gotcha. And anyway, so that's kind of in a nutshell what we offer.
No, that was really helpful. I think it gave a lot of clarification on a lot of the questions that people have for rising rates and all that stuff. And We may have to have you on several episodes because there's a lot of topics I think we can unpack there. But
Yeah,
you know,
we can
we
just pick
definitely
a
run.
subject, and go down the line if you
Yeah,
want.
for sure. You know,
For conversation.
unfortunately we've run out of time for this one.
Sure.
But I really want to say thank you so much for hopping on here today and take some time out to kind of explain some things. And I know a lot of questions that people have in their minds, and especially with the way that the world is right now, people are trying to save a lot more money. So that's been very valuable, Thomas. So thank you so much for hopping on today. So last thing, real quick, how does anybody reach out to you, or how do they find out more information?
Yeah, great question, Mike. You can call me at the office at 817-873-8010, and anybody, myself or my staff, can assist you. Okay. You can find me on Facebook, Thomas Humphreys Agency, LinkedIn, or you can just Google Farmers Insurance Thomas Humphreys Southlake, and I'll pull right up. So
okay, perfect. All right, Thomas. Well, again, thank you so much. Thanks for listening, and we will see you on the next one.
Mike, thank you very much. Have a good weekend, man. Thank you.